From the morning reading, foreigners have been abandoning U.S. stocks. According to the Federal Reserve, in the 6 months through September, foreign investors sold a net $65 billion worth of stocks, the most in at least 40 years. As a percentage of total market capitalization, it still ranks as one of the largest outflows in history. These investors tend to be trend followers, and large flows have been a consistent contrary indicator. The smart money is long gold to a degree not seen in a decade. Large hedgers are nearly net long the metal, surpassing all other extremes seen in the past 10 years. Gold has responded well to these extremes in the past decade, not so much prior to that, so it's a positive indication for a medium-term rally. We're currently seeing one of the smallest 7-day ranges in years, which has tended to precede weakness. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:07 a.m. Central Time, and I'm recording this in preparation for the market day of December the 1st, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decision that you make. So let's dive into the morning report. And after a little sloppy action yesterday, the morning report shows us that the markets are responding pretty well in the overnight. In fact, the S&P futures, the Dow, and the Russell futures are all up about 0.4%. The NASDAQ futures are up about 1/3%. Crude oil's up about 0.36. We have Euro up about 1/4%. Bonds down about 0.2%. Gold up about 0.3%. And overseas action, it's also pretty favorable. China up about 1/3%. Hong Kong and Japan are up big, with Hong Kong about 1.75% and Japan 1.34%. Germany's down just below scratch, and United Kingdom up about 0.5%. In terms of macroeconomic reports for today, we have in the United States, let's see here, final manufacturing PMI, ISM manufacturing PMI, construction spending, manufacturing prices, U.S. Total vehicle sales. Mostly minor reports. Of course, we've got bigger activity coming at the end of the week with the monthly employment report. In terms of current market conditions, from a volatility focus, we see the short-term VIX is up to a 16.6. Skew came down quite a bit yesterday. This is almost to get to a more normal level below 125. IV percentiles up a little bit, but still in relative terms very low. S&P at a 20, Russell at a 14, NASDAQ at a 15, and the Dow at a 21. In terms of standard deviation moves, we've now gone really a week of trading activity. 5 days ago, before you get 5 significant trading days ago, this does not include last Friday, before you have a standard deviation move. So after a period of time which there was a pretty good amount of volatility going both directions, we've been very quiet. And indeed, from the morning reading, we had the comment about not seeing a 7-day trading range this small in years. So been very, very, very small. In fact, let's go ahead and take a look at the charts. You look at the SPX, you see this. It's not uncommon to have a few days, and you see like here a couple days, small bodies and not much range, but this 1, 2, 3, 4, 5, 6, 7 days here of really small action is fairly unprecedented, even with holiday periods. Thanksgiving is generally a smaller trade holiday than is the time between Christmas and New Year's. Now, if this were happening in that week between Christmas and New Year's, I wouldn't have blinked. But this is a little bit beyond that. So just kind of keep that in mind. At some point, this is likely to effectively become a squeeze and then exit the squeeze. And a lot of times when you get an exit of a squeeze, that can explode one direction or the other. Think of it kind of like a coil that has tightened and tightened and tightened, and then finally breaks out of that coil. In terms of the NASDAQ, relatively small pattern there as well. Dow also. Now the one that's been a bit different here of late has been the Russell. And indeed the Russell, for the first time yesterday, had a negative body. Dark cloud cover, probably be what you would call that candlestick pattern. So that has some bearish implications, but that it would have a little bit of a retracement after 1, 2, 3, 4, 5 straight up and significantly bullish bodies. And really, you go back all the way to here, you had one kind of minor pullback day, and that whole stretch going from about 1150 and change all the way up to over 1200. So about 50 points on the rut, and pretty much straight up each day during that time before you get this dark cloud cover pattern. So something to kind of keep in mind there. In terms of the vol, you see volatility's been falling, and you know, it's certainly not a 12 or 13, but it's well within that 12 to 18 range at this point, so nothing particularly ominous there. And a quick look at bonds. Bonds have been ticking up a little bit, which is going to be interesting to see what this does as we go into the Fed announcement on 12/16 as to whether that becomes, you know, an inflection point in the bond market. With so much of the Fed futures predicting a quarter point increase, it would seem that, in quotes, everybody has already priced that in. Should not be a surprise or an inflection point, and yet at the same time, I wouldn't hold my breath about some increase in volatility. Now, that being said, if you look at the bonds and the vol premium that's priced in, there's really no vol premium that's been priced in front of something, you know, that would seem to be important. So everybody's acting like they know what's going to happen and they've already priced it in. And once the announcement comes, it's more about when is the next increase and how much is that increase than it is about the current quarter point increase that has been priced in. So kind of interesting developments here so far. Let's see where that goes. In terms of the daily report, mostly the same as yesterday. Phase 2, trend reversal. We're expecting in this phase to be bull flags and the like, to have relatively shallow retracements, and then to have you know, longer bullish trends. IBD status is in confirmed uptrend. Accumulation distribution score for the S&P and the NASDAQ did fall by a half point. These are both at C minus now. Again, breadth continues to be a concern. That story has been one that we have been following for several weeks. GMI index a perfect 6 out of 6 with a buy signal since October the 19th, though that author remains largely in cash. Fairly conservative approach there. Primary market condition is neutral bear, and I double checked that yesterday. We're still in a neutral bear, so that should be something that you keep in mind. And then, of course, on the decision points stock charts, we continue to see this really messy stack between the short term, getting signals going both ways, intermediate term, which is our primary trend following indicator. The intermediate term is all bull. Long term, though, back to the slop and mixed signals across all of the indices. When you put all this together, consensus is from these mechanical signals that we're in transition, and this transition can break either direction, though the slight bias would go to the bulls by the fact that you got IBD status and confirmed uptrend, and the intermediate term, which is our primary time frame, has been primarily bullish, though with yesterday's price action did flip to a first day bearish, but we still have an upslope sentiment, so the longer term would be expected to be bullish. That has been rising. We still have, from a position sizing opinion on both systems, still at 100%. So as we said, the market posture for the intermediate term did flip bearish, but that was on the S&P only. So another reason to kind of give a caveat. Now, we put the greatest importance to the S&P signal. That's more important to us than the other three indices put together. So that's why the overall signal does flip to bearish. But we do kind of take note that this is first day bearish, and we note that the fact that the other three still did hold up in their very bullish posture. So take that as a warning, but don't get overly anxious about it as of yet. It's an early sign at this point. We'll see if other things start to line up with that. In terms of the hedge warning status, we retain that level 0 plus, normal with some elevated risk conditions, and it is important to note that those elevated risk conditions have increased in the number and the breadth in the last couple trading sessions. In terms of volatility base, market in decline and sharp increase both fired yesterday. Distribution day count increased yesterday to a 6 on both the S&P and the NASDAQ. And actually, skew did drop. It's now greater than a 125. So that's about a 9% probability of a 2 standard deviation move in the next 30 days. In terms of the new highs, new lows, we actually had over 315 new highs put in the New York Stock Exchange yesterday at about a 2.5 to 1 ratio. In terms of intermarket risk aversion indicators, we now have all 5 of those flagging as risk off. So as we said here with the hedge status, this elevated risk conditions, we're seeing more of these warnings come in, so you need to take that into account, and that we would increase our hedge warning status to a level 1 and see some further deterioration. Wouldn't be entirely surprising given the trend of some of these warnings that are coming into play. In terms of our special opinions, no changes to these special opinions. We're still cautiously bullish. But given some of this new information that has come in today, you might be a bit more defensive. And indeed, we might want to be careful about the number of new positions you take the next day or two. Consider whether the other markets start to see an intermediate term market posture drop into the bearish stance. If you see that happen, if we go intermediate term bearish, then you're going to want to dramatically slow down the initiation of new positions until that strengthens. So just as we talk about the different ways to become defensive, think more about how those come into play, and they're all detailed here. You can pause this and read that in more depth if you're not totally familiar with our systems. Sector market postures by sector specific, you see quite a bit of deterioration came in with yesterday's action. Transportation, utilities, and retail all down across all time frames, and then quite a bit of weakness that came in to many of the other sectors. Do note the ones that have held up the best: financials and technology. And technology has probably been one of the most consistent stories of late, so take note of that. In terms of sector percent change, energy and telecommunications were up the most. Utilities, materials, and technology all also up for the day. On the extreme other side, healthcare, which had been a hero for quite a while, has really struggled of late. And you see now, especially 1 day, 5 day, 1 month, 3 month, it's This is not something that's just happened in the last couple of weeks. This has been a persistent area of weakness of late, so just kind of keep that in mind as well. That should be enough for today. Something to keep in mind as we go forward. Let's see, what do we want to focus on today? Well, let's go ahead and take a look at this one right here. Obviously, we have a number of offers always out there. And one of those things is if you're interested in being able to take the concepts that you're hearing here and see how they actually apply in day-to-day trading, we do that in our live trading chat room. This we think is a tremendous value at only $50 a month. Very much portfolio management in addition to swing trading and the like. We use equities, we use ETFs, we use options, all in a dynamically hedged portfolio. We're very centered on a philosophy driven by the IBD Top 50. We also use a number of option income strategies to bring in current income even when the market isn't going anywhere, and are very heavy into what we call our mortgage strategy. There's also swing trading present, especially as the market becomes more and more bullish, or at least in a strong trend one way or the other. And there's a complete set of resources here that will help you make better decisions with your trading and investment over time. That should make a significant difference to your portfolio. But anyhow, if you'd like more information on all this, there's a short video and so forth. Just go to this website and you'll find greater detail. All that $50 a month. In terms of if you find what you're getting here in the morning market preview video helpful to your trading, we greatly appreciate your acknowledgement of that by liking us on YouTube. Subscribe to the channel. That'll give you the heads up when this is posted. Of course, retweet us to your Twitter followers, to your StockTwit followers, etc. Direct comments can be sent to support@falconglobaltraders.com. And some of the other opportunities here. Disclaimers as always, hit the pause button if you need more time to review this. And of course, the full disclosures is at this hyperlink right here. And we'll see you back here tomorrow morning for the market preview from Falcon Global. Good trading.